always searching for companies with great management around here. But what does great management even look like? This is one of those things that's impossible to quantify, even though it's very important, which is why I'm always trying to find examples to help illustrate my point. And last week, we got yet another fantastic demonstration from a man by the name of Rick Hill, the newly appointed interim CEO of Symantec, a guy with an incredible track record of creating value for his shareholders. In early May, this company had just delivered a disastrous earnings report, and the previous CEO resigned, candidly under a cloud. Then Symantec picked Hill, a longtime tech executive on the board of directors, to take the reins. The stock bottomed at $17.50 about a month ago. Yet within 2 months, Rick Hill turned the narrative around. You may have missed it if you were on vacation last week, but late Tuesday, we learned that Symantec was in talks to sell itself to Broadcom. And the stock surged 14% on Wednesday alone on that news. It's now $25 and change. We don't know how this thing's going to play out. We don't even know if the company will be sold. But you're already up huge since Hill took over. And that's pretty much par for the course for this guy. Now, I'm not surprised at all by the fact that Rick Hill might want to sell the company for a nice premium. In fact, 8 months ago, I told you that this was a likely outcome, given that Symantec brought him in as a board member. It was like a little mention in a press release, but I highlighted to you, this is the time to buy. Now, look, I never would have predicted that he could get something done within 2 months, taking over as interim CEO. The man's got the Midas touch, though. So tonight I want to walk you through how this happened, what the deal might mean for Broadcom, and what we can learn from it going forward. Let's start with how. For those of you who've never had to deal with irritating antivirus pop-ups on your computer, Symantec makes cybersecurity software. They're one of the older players in this space. You know them as Norton Antivirus. Oh, by the way, they also own the incredibly lucrative LifeLock. While this company is 37 years old, the current incarnation goes back to 2014, when the old Symantec broke itself up. Then, about 3 years ago, the new Symantec, a leaner, meaner cybersecurity company, snapped up the privately held Blue Coat Systems and handed the keys to the combined company to Blue Coat's management team, including a man by the name of Greg Clark, whom they made as CEO. For more than a year, the merger seemed to be paying off. Stock surging from $15 in early 2016 to north of $34 in 2017. Last year, though, the story started breaking down badly. First, Symantec disclosed a big internal accounting investigation, and while it didn't uncover anything major, it left the stock more vulnerable to the big market-wide breakdown in the fourth quarter, which brought the stock back down to the teens. And that's when I started recommending Symantec. The stock had been hammered, but the story had already changed. In September, the company reached an agreement with the smart activist investors at Starboard Value. Part of their arrangement, Symantec had to appoint Rick Hill to its board of directors. Now, Hill has a long and storied history in this business. He's the CEO who sold Novellus, the semiconductor equipment maker, to Lam Research back in 2012 for a 28% premium, something that made many of our viewers a lot of money because Rick Hill was about as close as a regular as you could get, and he kept buying back stock and showing you how cheap it was, and then boom! Do you know that when Hill took over in 1993, Novellus was a $100 million company? In 2012, Lam paid roughly $3.3 billion for it. Now, there's a track record. That's why when I got behind Symantec in November, I specifically told you that Hill's involvement made it more likely that the company would put itself up for sale. Remember, it was Starboard that brought him in. He's worked with them as a consultant for years, helping them turn around struggling tech companies. However, it hasn't exactly been a smooth ride between then and now. As 2019 got rolling, Symantec's stock rebounded along with the rest of the market. Then the stock fell off a cliff on May 9th when the company posted an okay quarter, but really horrendous guidance. It was so bad that Greg Clark stepped down as CEO. And that's when they handed control of the company to Rick Hill, who immediately brought in his own chief financial officer, Vincent Pilette. He was previously the CFO of Logitech. After all that turmoil, it took about a month for Symantec stock to bottom. But ever since it's found its footing in early June, it's been marching higher until last week when it catapulted in the stratosphere. And that's when Bloomberg broke the news that Broadcom's in advanced talk to acquire Symantec. Of course, as I mentioned, this is not a done deal. Apparently, the two companies are still haggling over price. David Faber, CNBC's own M&A maven and my Squawk on the Street co-host, says he's hearing that they could pay more than $25 a share, but less than $30. And if Broadcom can't make it work, well, they've got a backup plan to buy another software company, and that's the privately held TIPCO, which, by the way, used to be regular on the show, too. Then over the weekend, Bloomberg broke another story. They said that Broadcom's getting its financing ducks in a row, and they note that Symantec's former CEO, Greg Clark, not to be confused with Clark Gregg, is working with a private equity firm to set up a rival bid. If Rick Hill can set off a bidding war, that would be the cherry on top. Even if he only makes the Broadcom deal happen, I think that's enough to guarantee him a position in the Mad Money Hall of Fame, like part 2. Let me make one thing crystal clear. At this point, it's too late to buy Symantec. Once you know a deal is in the works, That's when the arbitrators step in, and so therefore the easy money's already been made. So even though it may go out, I think at 28, if it goes out, I'm not getting behind it here. It's moved too much. However, there is definitely a case for owning the potential acquirer, Broadcom, symbol AVGO. Now, this is an odd deal for a gigantic semi company. It would be their second software purchase in a row, following last year's acquisition of CA Technologies, which worked out incredibly well. Back then, that transaction did strike many investors as odd, and Broadcom stock got hammered. But the stock ultimately rocketed higher from last November when the deal closed to the beginning of May, when the semi cohort peaked as the trade tensions with China heated up. Now that our government seems to be maybe ratcheting down those tensions at least somewhat, we can focus on the fundamentals again when it comes to the semis. And at Broadcom, the fundamentals are real good. CEO Hock Tan is a brilliant deal maker. We know that the CA takeover is doing better than expected, in part because CA shared a ton of large enterprise customers with Broadcom. Now Tan is trying to buy Symantec because he wants to offer his clients bundled solutions rather than just hardware. Basically, he's trying to get a larger piece of the information technology spending pie. Symantec gives them a truly excellent security offering that they can sell alongside their chips, and I think it could be a potent combination. And while Symantec still needs to be turned around, and I unfortunately think a lot of people have to be let go, Tan is one of the few executives out there who can pull that off, as well as Rick Hill. Well, he's done it many times. Bottom line, when you find a bankable chief executive who always seems to create value for the shareholders, stick with them. 2 months ago, Symantec looked like a total mess, but they made Rick Hill interim CEO, and he's perhaps found a way to strike a deal with Broadcom for his company and in record time. And hey, if you want more of that Rick Hill magic, you should know that he's still the chairman of Marvell Technologies. We own that one from my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. But more importantly, you need to view this as a learning opportunity. When a CEO has earned the benefit of the doubt, please give it to them. Richard in New York. Richard.
Hello, Mr. Cramer.
Yes.
Thank you very much for taking my call.
Of course.
And more importantly, thank you for being so thoughtful and generous with your time and knowledge.
Oh, thank you. Thank you very much. It's very kind.
I have a question regarding Dell Technologies. If Dell owns 81% of VMware, which is worth about $55 billion, why is their market cap only around $36 billion?
This has historically been an issue. It has to do with taxes. It has to do with VMware growing faster than Dell. People would rather own VMware. I totally agree. And that's why Dell was private. Michael Dell, the last quarter, was not that strong. But you're absolutely right. I mean, the issue here is it's an oddity. It's why I've been recommending VMware, because I actually believe that, I know this is going to sound odd, it trades at a discount because it's connected to Dell. Maybe it should trade ultimately at a premium because it's connected to Amazon. Let's go to Ken in California, please. Ken.
Booyah, Jim.
Booyah.
Tom call from Palm Springs.
Okay.
Hey, Alteryx has been our best performing stock and seems to have ever increasing earnings, 44 cents per share recently. I've harvested profits once and I decided earlier today to get back in. Here's a question. If they are not pursued as an acquisition target, what do you see Alteryx going to by next spring?
I can't. Alteryx is one of the hottest stocks I've ever seen. By the way, Alteryx follows you everywhere if you do the cookie thing. I have Alteryx. They find me. It's like, what's a badass software manager? It's Alteryx. These guys are real good at their job. I am doing a piece about some stocks that I regard as being too expensive for me, but the companies are great. And right now, Alteryx is on that. Great company, too expensive, but it does make money. Let's go to Art in Maryland. Art.
Hi, Jim. This is I'm a first caller. I'm calling from Bethesda, adjacent to Washington, D.C., also known as Tweet Town. I have a stock that I've been in for quite some time, Teradyne, symbol TER. It's been very good to me for some number of years. Currently, it's somewhere in the $47, $48 range. Is this a buy, sell, or hold? Is there any...
it's an excellent test and measurement company. I think you're absolutely right that it's a terrific company, and I would continue to own it, even though it is up. It is up almost 50% this year, but I do think that it is very, very well run, and I would think just own it. All right. When a CEO earns the benefit of the doubt, I want you to give it to them. Rick Hill, you worked some real magic here with the Symantec. Much more mad money from gaming to hospitality. This company's got some hot properties in its portfolio. So is it time to make room in your portfolio for the stock? I'm sitting down with the CEO of Vici, VICI Properties, to find out. Then, why keeping it simple in this market could lead you to profits. Don't overthink everything. And all your calls, rapid fire, tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.